Hey, John, so for the first quarter, strong beat here for Amazon. We've got the top and bottom line numbers. EPS of 98 cents. That was a beat. Street was looking for 83 cents from Amazon. That was on revenue of $143 billion. Better than expected. Wall Street consensus was $142 billion. We are still looking through the results, but that's the initial reaction. You can see stocks pretty much unchanged here, slightly higher after hours, John, but we will keep looking through these results here, especially for that AWS number. We'll come right back with some details.
All right. Sometimes it's like baked goods, Mike Santoli. You got to let it settle a little bit. It was down 4% initially, but then popped back up to even, and now it's up 3.5%. We haven't even had the earnings call yet. Mike Santoli, I'll go to you on this one. There were big expectations out of Amazon from these results after what Microsoft and Alphabet turned in.
For sure. And also, it's a very consensus long. People are optimistic on the story about what they can do with margins. Obviously, AWS kicking back in, reaccelerating in terms of growth rate. So all that seems to be baked into what the street was expecting. You also had estimates up quite a bit over the past few months. So, the past quarter, they definitely hurdled that. In terms of what revenue guidance looks like, I think that's where a lot of the focus might settle in from here.
Yeah, along those lines, Adam, North America segment sales for Amazon up 12% year over year, $86.3 billion. International segment up 10%, increased 11% ex foreign exchange rate impact. AWS, this is the big one, right? AWS segment sales increased 17% year over year to $25 billion. That looks like it's a little better than street expectations. It's interesting to see that after Alphabet beat with its cloud, Microsoft beat with Azure with its cloud business this quarter as well. It really speaks to perhaps the impact that we're seeing of AI, all of these big investments, as these hyperscalers continue to take on more of that cloud-based market share.
Yeah, no, that's a very solid AWS number. That's one of two key numbers with the stock. The other really important one is the North American retail margin, which they have outperformed dramatically on for the last several quarters. So it's really AWS and those retail margins that have been the driver of the story. And so I haven't seen the retail margin number yet, but that AWS is a pretty healthy. It's about 200 basis points plus above expectations. And like you said, echoes what we saw last week out of Google and Microsoft. Still very, very robust trends in these hyperscalers. And that's the reason why they're pouring tens of billions of dollars into CapEx. Continue to build it out. And Microsoft last week said that they're still constrained on Azure with AI, and so they're still pouring a lot of money into CapEx.